Well, with the markets around the world fluctuating wildly, big and small investors are wondering what to do with their money. One financial expert says the answer is simple. It's as old as the Bible itself.
Stocks are down around 35% this year, the worst year for the market in decades. The collapse has left investors dazed and confused. But one study of investing covering nearly 4 decades found that the best way to shelter yourself from financial storms is to follow the old advice, diversify. Spread your money around between stocks, bonds, and other investments. Now, author Robert Katz shows that this wisdom goes back as far as King Solomon in the Old Testament. In his new book, The Solomon Portfolio, Katz says the wisdom of Solomon from 3,000 years ago is just as modern as the newest investments today.
Well, it's an exciting book. It's called The Solomon Portfolio. It would certainly be better than Bernie Madoff's portfolio. Bob Katz is here with us now. Bob, welcome back.
Thank you. Good to see you.
Okay, Solomon. Major premise of Solomon. What did he say? I know you quoted from Ecclesiastes.
Well, I get a lot of, as a CPA, a lot of people ask me about investment advice. And for any question I get, I usually turn to Scripture. And in Ecclesiastes, I mean, why not go to the richest and wisest man that ever lived?
Yeah.
And he tells us clearly, divide your holdings into portions of 7. Probably the first recorded reference to diversification.
Yeah.
But the question was, and he's not around to answer, what are the 7 asset classes you're talking about?
All right.
Because I absolutely believe him. Well, I'm embarrassed to tell you, I'm reading this obscure journal, the Journal of Indexes.
Yeah.
And I find this article by this professor at BYU who's spent his whole life studying portfolio combinations. And he's tested them for 38 years. And he's every combination. And he, after all of this study and analysis and scientific work, came up with the conclusion that the portfolio with the highest return and the lowest standard risk, standard deviation for risk, was a 7 asset class portfolio.
You're kidding. Is that
when
right?
I read it, I said, Ecclesiastes 11:2 and 3 just immediately came to me. Here this man's confirming 3,000 years later what Solomon told us 3,000 years earlier.
7 assets. Well, the Lord gave me that scripture and, divide your into portions of 7, perhaps by 8, for you do not know what disaster might befall the land.
Exactly.
And we went and bought a operation down in Nashville as an alternative just in case, and it's worked out very well for us. Yes, but we didn't do it 7 times. So once you got the 7, what do you do with them?
Well, you divide them, as Solomon said. It's funny because he looked at different weightings, and he found exactly what Solomon said to be true, divided equally into these 7 portions. Now, the portions he came up with were large cap stocks, small cap stocks, foreign, real estate, commodity, cash, and bonds. And he studied these and multiple combinations, but he found that if you divide it equally, like Solomon said, because of correlation, that randomness, over a long period of time, again, it gives you the highest yield with the lowest amount of risk. And it was a fascinating study, but what was so fascinating is how it confirmed Scripture, which is just wonderful to me.
Isn't that marvelous?
It truly is.
All right, well, today it looks like everything's correlated. They're all down. Every one of those categories you mentioned is down, with the exception of cash, I guess, cash and bond.
If you look at, in a panic, no question, correlation comes to 1. And correlation is randomness. You want things that don't move in the same direction. And you want it as close to 0 as possible. In normal times, for the last 38 years, this 7 asset class was like 0.12, very low correlation. In panic and fear, correlation goes to 1. But this, these aren't the end times. These are hard times, but they will come to pass like every other recession. And actually, now's the time to be investing.
I think that.
I mean, Warren Buffett's been overquoted with, you invest when everybody else is fearful, but there's a lot of truth to that. In the last 10 years, this is probably one of the absolute prime times to get into the market as a long-term investor.
Sure.
Diversified.
What else did Solomon say besides that you quoted, besides dividing your assets in the 7 portion?
The interesting thing about it is, if you go back, a couple of interesting things. If you go through Scripture, you'll find a lot of these 7 asset classes in a similar form in Kings and I think Chronicles, where it talks about exactly what Solomon held. And they're very similar, and I mentioned in my book, to the 7 asset classes.
What did he hold?
Oh, I'm sure he held a lot of large cap companies and small companies. He had great commodity holdings, a lot of real estate holdings, and the equivalent, whatever the equivalent of cash and notes and bonds were back then, you find references to those. So all 7, or almost all 7, if not all 7, Solomon held those. He understood. But what he also, I find the first reference ever in recorded time, he talks about correlation. You don't know what disaster is going to come upon the land.
That's right.
To me, that's correlation. He's telling us, look, it's not a question of if, it's a question of when. So you want your assets correlated. And again, this is 3,000 years ago. And, it's wonderful to have all this modern day science confirming it, but it's fascinating and amazing to me that the answer was right there. Like every other answer, if you go to Scripture, you're going to find it.
Ecclesiastes, a book of wisdom.
Absolutely.
Well, what are you putting your money in now?
Well, those clients that I help manage their money, by and large, new money, we're doing if you're not a long-term investor, then I'm really not the person to help you. We're looking at long-term. So new money, we're following Solomon's plan.
Large cap, small cap, foreign.
Yeah, most of my advice right now is convincing people, and it's really not that hard. I have a good clientele. Is convincing people sit still. Most recessions last 17 to 24 months, and if you don't sit still, if you bail out at the bottom, when they do come back, they come back quickly. The first 12 months after a recession bottom, the market comes back about 34 to 40%. You don't want to sell at the bottom and then miss that quick move up, and that's typically what happens.
It's gut-wrenching when you see your portfolio down 50%.
No question.
How did I miss it?
Rebalance. Look around for bargains. There are so many stocks that are good companies. It's the rising tide theory. Everything gets beat up. There's a lot of good banks out there. There's a lot of good oil and gas companies out there. There's a lot of good pharmaceutical companies out there. But when panic comes, everything gets forced down. So there's a lot of good bargains for the long-term investor.
Well, if they can hold their dividends, it's simply extraordinary how high stocks are yielding now. It's so much higher than bonds. It's unbelievable.
Oh, yeah. And you look at and I'm not promoting, but you look at a Pfizer, it just comes to mind. 8% yield. This is a major international company with a sound balance sheet, good pipeline for new drugs, and there's so many stocks like that out there.
Well, you could set up your retirement with that kind of return if people do it properly. Now's the time to jump hold.
It really is. It's you buy at the bottom. And if we're not there, and I'm sure they're going to be testing the bottom, but if we're not there, we're pretty close. And the thing people need to realize is we've had so many recessions, even since World War II. Every time we will come back. They're getting ready to put up $1 trillion into the economy. I mean, that may be bad in the long term with national debt, but in the short term, it's got to be an incredible stimulus.
It has to. It has to.
So
I see one
and low
day
interest rates,
rather serious inflation, but maybe they could stop the money out before inflation gets too.
Well, we've still, virulent. As individuals and as a nation, we've still got to understand the fundamental. You've got to earn more than you spend. And right now, individuals and as a nation, we're not doing that. We've got to address that fundamental problem in the long term. But in the short term, when you lower interest rates to near zero and you pump over $1 trillion, only one thing can happen. I mean, this great stimulus is coming.
Oh, yes. Well, that's what I think. Well, Bob Katz, ladies and gentlemen, it's a small book, but filled with wisdom. The Solomon Portfolio. Where do you get this, by the way?
Well, you could go to my website, which is robertkatzministries.com.
Okay.
You can get it at Amazon.com. I know you can get it on CBN website, and it is working its way into the bookstores. So if you go to a bookstore and ask for it, they can order it.
Well, we have it here at CBN.com. It's a small book, but filled with wisdom of things that you need to do right now. The Asset Class 2, Asset Class 1, it's just by a man who is a CPA with a lot of experience. So, Bob, it's great to have you with us.
It's great to be back.
God bless you.